Welcome, everyone. My name is Moshe Weinreb. I'll be today's host. We are joined by Ben and Ashki as they discuss some of the key features of 71 Harvard Ave. I can't see if they're on the call yet, but we have invited our partners from Kenwood, Jerry and Boris, who will be doing the construction. So we will hear from them a little bit later if they're on the call as well. I ask that you leave your questions until the end of the presentation. I assure you, we are not going to leave without answering your questions. So please grab a pen and paper, write down anything that comes up so that you can ask and take your own notes. All right, let's jump into it. Now, before we get started, I do have to put in this disclaimer. This investment is only for accredited investors. This is a registered investment with the SEC, and there are rules as to who we can make this available to. Please speak to a legal professional if you're unsure of your investor status. With that being said, there are a couple of things that I want you to walk away from today's presentation on 71 Harvard. The first is what sets Chestnut River apart from every other firm. The second, what's so great about Brookline? The third, why is 71 Harvard Ave so special? It's a really cool project, but it's also a really great opportunity to do a lot of good along the way. As with all our projects, there is a great story here. We're going to learn a little bit more about that. And lastly, and most importantly, is how we put all of these things together to create a really unique opportunity for you as a potential investor. And I will tell you, you're not going to find opportunities like this on the street. We've done a lot of great work making this happen. To jump into the beginning, how did we get here? Why are we looking at 71 Harvard Ave in particular today? We look for investments that fit several criteria. From the outset, we look at the risks of a particular investment. There's a lot that's not in our hand, and we do whatever is in our power to mitigate that as much as possible. We ask a lot of questions. Is this the right place? Is this the right time? Is this the right project? And yes, we ask ourselves too, is this advisable to do? Our team, which I promise you're going to meet in a second, carries with them a lot of experience. We're local. We understand the market, we understand regulation, and we understand the end customer. And we know the people we're working with. That goes into our asset evaluation. Our ethos is creating value without creating harm. That means that we intend to honor, this means many things, and we intend to honor any interpretation of this. We work on projects that enhance the neighborhood. We aren't trying to cram as many units as possible onto a property. That gets people in trouble. We design projects to create lasting value. And creating value without harm means something special to us as well, to our firm. We see many projects that are trying to get off the ground or having trouble just as they're lifting off. And using our expertise and experience, we can go in and rectify situations that could end up very poorly, ensuring that all parties come out winning and, most importantly, with their dignity intact. That was the case when we discussed Bradford last week. It's the case with our other projects, and it's certainly the case here. And this leads us to our last pillar, financial structuring. With a flexible mandate, we can think about financing in non-traditional and creative ways. It's these three ingredients that help us put together some really exciting opportunities for you. And this is the team that pulls it off. Up on the right, we have Ben Marshall, who leads the firm. He sets the direction, is the brains behind the operation, and he's originally from New York. Not that we're going to hold it against him. Ben has been living in Boston, the Boston area, for close to, how many years is it now? Almost 30 years. He spent the majority of that time as a general contractor, picking up great investments along the way. Also, great insight about the area. We'll get back to that a little bit later. Up next, we have Al. He's our director of development. Al is originally from South Africa, where he's got his degree in engineering. Al's development career spans over 4 decades and much of the US. He has built a lot of the large residential projects that you see in Brookline, and he's very humble. The truth is, I don't know the full extent of his prowess and capabilities. To his right, we have Ashki, another one of today's sponsors. He spent a good chunk of his career on the lending side at Eastern Bank, and he offers a conservative eye to our underwriting and evaluation. Sorry, was there a question? Below Ashki, we have Dave. Dave Seychelles is the head of our strategic operations, strategic partnerships, spending much of his time making sure that we're in front of the right people. Dave has spent the majority of his career in business development and brings that experience over here to us at Chestnut River. And then we have Joel. Joel is our in-house counsel. He received his JD from Northeastern and serves as the vice president at TD Bank. He's best known for keeping it real and keeping it kosher. And that brings us to me. I'm the director of operations. I spent the early part of my career at Amazon as a software engineer before moving over to real estate. As a youngster, I bring the tech savvy to the team. All right, now let's jump into today's sponsors with a little bit finer detail and a bigger microscope. I've known Ben personally for a long time. What I've known about him for even longer than that is his reputation. Ben is a respected builder in the New England area, but he's also extremely well regarded and an upstanding individual. Professionally, he has started and exited several companies, most recently his green stamp insulation business. He boasts a $30 million real estate portfolio averaging very healthy returns. Ben, I know I'm underselling you here a little bit. Anything you want to add about yourself?
No, feel free to undersell me. I'm more comfortable that way.
Moving on, Ashki has also built a reputation in the finance world. A lot of what we do here is creative, and we rely on Ashki's insight to see through the mess numbers can make so that we can walk away with a clear and simple financing structure. Ashki has personally originated over $250 million in loans and has a proven track record of going full cycle on high value projects of his own. Now, Ashki, we're going to get to the meat and bones of 71 Harvard, but while I have you here, can you tell us about some of your expertise in finance structuring and perhaps maybe seen here in this?
Thank you, Moshe. Part of the angle I like to bring to deals is a win-win structure for all parties involved. So when we align or find deals that are profitable, not only to the developers, but to all the investors, and we can deliver a product to the end market that we know will be desirable and sell at a very, very favorable rate, it gets us very excited. And that's what we shoot to underwrite and try to produce as hopefully this one is.
Awesome. Thank you very much. I know I probably haven't covered your entire CV and as detailed as it should be. So if I've missed anything, just let me know. Awesome. All right. To another spotlight. Jerry, I see you're on the call, so I might call on you at some point. But I want to talk about our development. Hey, Boris, how's it going?
Good. How are you?
Good. Good to see you. Glad you're able to make it. We're going to have some questions for you. So just stick around, all right?
Okay.
Amazing. Development doesn't happen in a vacuum. Building an upscale and luxury product such as this is a labor of love, and that's where Kenwood comes in. Today we have with us Jerry and Boris, who I was just chatting with. On the right of your screen, you'll see a number of recent projects completed by Kenwood in Brookline. If you're around, I recommend you go and check them out. Jerry and Boris, do you want to maybe give us an introduction? Say hi, tell us about yourselves.
Hello, everyone. My name is Jerry Korchmar. I'm one of the owners of Kenwood Builders. My partner Boris is next to me, Boris Kutikov.
Hi.
And we do this for almost last 20 years. We built, I don't know, a couple of hundred of houses, units, luxury stuff. Majority in Brookline. We did here and there in Brighton, Weston, Newton, but 95% it's a Brookline projects. And we try to pick up the most profitable projects, and we're always doing high-end finishes. I mean, here and there we can, depends on the project, we can a little bit less expensive finishes, but we don't cut corners, and we try to build with a pride, and we're very happy what we do.
Awesome. Okay. Great to hear that. Jerry and Boris are working with us on another project in Newton. It's promising to be a really nice single family when it's done. If you want to hear more about that, always feel free to hit me up. But until then, let's talk about Brookline. So we've covered Chestnut River, we've covered the team, we have the best people doing their best work. Let's talk about the area. Now, I lived in Brookline all my life, but I think Ben knows the area a little bit better from the developer and real estate perspective. So I'm gonna shift things over to him and have him tell you a little bit more about the area around the property and why it's a really hot place to be right now.
I'm waiting for the fire trucks to go past here. 1 second. All right, so this is Coolidge Corner. This is a short walk from the building right over to Trader Joe's, right to Harvard Street. I think for anyone who's familiar with Brookline, you realize what a unique, it's a small area, but the ability for people to be able to walk out their door and enjoy the neighborhood there is really unique. It's a really desirable location for people to sort of age in place. I think what we're looking at here, the product we're putting together here, are luxury flats. So 3 luxury flats. And the question is, who would want to live in a luxury flat? And is this a location they want to be in? I think it's a resounding yes. They're not only close to downtown and not only close to Boston Medical Center, BU, and everything there, any place where they'd likely to be working, but they're close to tons of culture, arts, and shopping, which makes it a great place to be. So it's a very exciting place. It's a hard place to find real estate, and we're excited to have found this one.
Ben, if I can just follow up real quick on Brookline.
Yeah.
One of the reasons why we love it is on three pillars. And from a banking standpoint, on the downside risk protection, a lot of times I think to myself, God forbid another 2008 scenario happens. Are we happy with this location? And three of the things Brookline, especially Coolidge Corner, brings for us is proximity to universities, hospitals, and that comes with it professionals and professors, doctors, and also a lot of attorneys that are in the downtown area or working from home are in this area as well. So it gives us the downside protection, and also in a great market, those professions can easily write the check for the end product or looking for what we're delivering at the end product here.
Yeah, that's exactly right. I mean, I don't know if most of you put this on any of the slides, but there's the data of what an absolutely incredible housing shortage there is in this area is unique. The supply is just, it's totally undersupplied. So there's no question of whether or not things will sell, right? There's a huge demand for it, and the only question really is how much you're going to get for it. That's ultimately how you do it. And the way we looked at this project is we all of our underwriting is based on the lowest we could possibly imagine selling this for. And we'll talk more about that in some of the economics of the slides, but that gives us that downside protection we're really targeting. The center picture, if you're not from the area, on the right is the picture of Coolidge Corner. So that is maybe a 3-minute walk if you're walking slowly from the house. It's a great area, right? That's the T right there. That takes you to downtown. It takes you to Fenway Park. On the other side of you see the local reservoir. It's a great walking area. It's just a great place to be, a great place to walk around. The marathon goes right down there. The Boston Marathon goes right down the street there. So very exciting place to be.
All right, great. Ben, thank you for sharing. Ashki, you as well. No one mentioned Fenway Park as a kid. That was one of my favorite places to go, but kids aren't buying, so I guess we'll have to leave that as a perk for a larger family. Now, let's talk about the actual property. So what we see here is a architectural rendering of the final product, and we're not quite there. Currently, the structure is what you see on the left of the picture, the main house, in addition to a smaller version of what we have in the middle. Our plan is to do a full transformation, raising the back of the addition there and adding in what we see as the third section on the right. Now, there are a lot of really, really cool features about what we want to add to this project. Ben, I'm going to throw it back to you, but when looking at this site, was there anything that stuck out to you that made you see this as a great investment opportunity?
Yeah, the first thing is, I'm sorry, is everyone seeing, Elliot, I see your note that you're not seeing the photos. Is everybody else seeing the photos clearly? Just give a thumbs up if you are.
I think we need to turn the screen and then on the right, it's everything. If you, all depends how the screen.
Oh, if you're looking at it on your phone, turn your screen, you're saying?
Yes.
To the side. So just make sure you've got it in the wide view. Elliot, did that work?
Oh,
All right, on a laptop.
Moshe,
Yeah.
it's Vivian. I'm on my phone. I'm sorry I'm a little late, but I'm trying to figure this out. Okay, I see the building, the three.
Perfect. Okay, great.
Okay.
And we'll share
So we'll share the slide deck also, and you'll have the video afterwards. So if there's something you're missing,
Okay, thank you.
we'll go right through it. So the general idea, there's a couple things which were really exciting about this project. The reason we bought it before it even hit the market. The first is that this is first off, it's a multifamily zoned project. So what's exciting about it being multifamily zoned is we could, in theory, put 20 units on this project if we wanted to. So the question was, what is the best and most valuable use of the property? And luxury flats are what are generating the best return with the least amount of issues with respect to having to meet other requirements that would make you donate square footage. So other issues could be requirements for common space, or maybe something like having to have requirements for affordable housing. In Brookline, we're able to put in 3 units with no additional requirements and maximize out the space, which was 13,500 square feet, to get get sort of the best and most usable, sellable space here. So that's just from one perspective. And it created a product which is in high demand, which is 3,000 square foot, approximately 3,000 square foot flats. A flat, for any of you guys who are not familiar with the term, means all the living's on a single floor. So if you're moving in and you're a buyer in your 50s or 60s, you know that you can spend the next 20, 30 years in this house without having to worry about the stairs or aging in place. You've got it all right here. And it actually is in close proximity to a lot of medical facilities. So you're really in a great location for an aging in place site. The other thing which was really exciting about the project is that the cellar, this is in a historic zone. So you'll see that it's got a lot of historic characteristics to it. The seller had gotten himself in trouble. He was in some high interest debt and he had to get out of this project quickly, but he was already quite far along the way of getting it approved with the historic district. He had already gone in front of them. He had worked with his architect. His architect had all the plans. And we were able to go in and work with the same architect on the same historic process. And instead of starting at step 1, we were able to start at step 9. So the architect knew exactly what we needed to do to finish this out and get it approved from historic in Brookline, so we could move right in and get the construction started right away. And that may seem like something small, but it actually is the difference of anywhere from 6 months to a year of entitlements, which would have made the project much less cash flow, much less positively, I guess. So the design here, what you're seeing, the question is how are we doing luxury if everybody's just parking outside and there's only a single car garage there? That should be the question we're all asking. That's not luxury. That's a single car garage for 3 homes. And if you want luxury, you better have covered parking. So here's what happens. The car actually will drive into that garage, and inside of that garage is like the Bat Cave. There's a car-sized elevator that lowers the car down to the underground parking lot underneath, and then rotates the car so this way it's facing just the right way so it can drive into its spot. And underneath that is 6 indoor parking spaces. So yeah.
Sorry, we don't need to rotate. Once the car will lower in a parking area down, people can just drive out and park themselves anywhere they like. It's a large parking area down, so we don't have additional, installations. It's very simple lift, and there's no problem.
Great. So thanks, Boris. There will be no rotation of the car, although it sounds much cooler to me that there should be a rotation of the car. But Boris is right, as the engineer. Boris is the guy who's building this thing. So whenever we have questions, we turn to Boris and say, what's the best way and the best way to build it, but what's the smartest way? How are we gonna really protect our margins? And that's where Boris is solving all those problems. Like he's incredibly actively involved with this. I'm sure, Boris, did you have a meeting with the architect on the project today about anything? Probably 1 or 2.
Actually, yesterday.
Yesterday.
Yeah.
Okay, fantastic. So as we get to the question and answer part of it, guys, it's great to have Boris here. We're going to be able to throw questions right at him. But he's knee deep in this project right now. So that's how we end up with 3 units. Each one has 2 covered parking spaces, indoor parking. There's an underground garage. There's a private elevator that's accessible from there to get people up to their units. And then the finishes inside are going to be Kenwood quality finishes, which if any of you guys have had a chance to go to their showroom or see their other projects, you know that Kenwood quality finish is not a spec finish. It is a much, much higher level of finish. It's something that makes me want to have them come and renovate my house every time I walk through one of the projects we do with them. But that's going to have to be for when I get older. It's really, really beautiful work. All right, let's move forward.
All right, Ben, well, thank you for that. Now, that brings us to the best part, the numbers. And if you'll forgive me for saying that, but I am a numbers guy. And I think you can see everything in numbers. We see great returns. We see the entire project. We see our downside protection. It's all captured in the numbers. Just to walk you through them, we're going to be purchasing the property for just under $3 million. We'll put in 5 of work. And by conservative estimates, we're looking to sell each unit for about $4 million. Now, on the return side, we're offering a great opportunity for investors, and we can walk you through the waterfall in just a moment. But to give you the highlights, investors will be receiving a 9% preferred return and about a 1.6x on their capital invested, which translates to about 27% annualized returns. And we want to turn this project around in 24 months. And for real estate, that's pretty quick. But the truth is, the opportunity starts now. We really want to help this seller out, and we have a closing that's coming up in 30 days. So we got to jump on it. Ben, is there anything you'd like to add into the numbers? I can jump to
Yeah, there's a lot of whenever we get into the financial aspect of it, we start using technical terms, and everyone uses them differently. And I always feel like when people are telling me what returns a deal is going to generate, they sort of dive in and then it goes past me like a hurricane. I want to sort of dig down just so people get a sense of what we're talking about here. The first off is when you're doing a rule of thumb calculation in real estate, we're always looking at what's the price per square foot that things sell at in this market. So we know in this market that this sort of luxury flat sells anywhere from $1,400 to $1,600 per square foot. And if you do the back of the envelope math on that, if we're building and selling 3,000 square foot units at, use the middle number, $1,500 per square foot. So there your projected sales price would be $13,500,000. So why are we projecting 12 million when there's another $1.5 million, which is a reasonable assumption to make? And that's because a lot of the people on this call are people who invest with us, who are family, who are friends, and we are big fans of making conservative assumptions. We want to wow you with the check you get at the end of this. We're not happy just giving people a nice check in our investments. We want you to be so impressed that you guys go out and you try to bring all your friends into these deals in the future.
Not only that, we also co-invest on a lot of these deals. Not only do we do the GP, but a lot of times above and beyond, we co-invest with the other investors. So we like to have skin in the game, and we like the deal so much that a lot of times we put our own funds in above and beyond too. They're so good.
Every time we put our own funds in. I mean, it's we're always looking at it, asking ourselves, why do we want to go out and raise money? Why not just do the whole project ourselves? And the short answer is that eventually you run out of money. So if you want to do a bunch of projects, you have to go out and raise money. But these are all projects we would be more than happy just doing ourselves. So what is this investor MOIC? MOIC should be thought of as, this is the fixed return of multiple of invested cash, or cash on cash returns. So a person investing $1 million is expected to get a return back of $1.6 million, $1.61 million, based on these conservative assumptions. And our assumption is that will take 2 years for you to get that money back to you. If you ask Boris and Jerry, they're going to tell you that it's really 18 months, that it's not really 2 years to do this whole thing, right, Boris?
Yes, it's really 18 months, but we have to finish development the project, and you have some not active construction phase of any construction, like getting permitted and everything else. So it's gonna be.
Boris, how long do you think the construction here will take? The construction itself.
For this, it's this construction year and a half. Yeah, it's about year and a half.
A year and a half.
Little bit, maybe a little less. All depends. But it's not really for us. It's not really complicated project actually, and we see ways how to make it a little lighter. So once design done completely, maybe we will see how to shrink the time. But this is basically, we like to be conservative.
So that's all built into this, and you have everything in here. When we talk about the total investment, we have all of the fees from the bank and all of the interest carry from the bank. All of those things are all figured into that total investment price, assuming a 2-year hold. If we are able to sell it earlier, then there's less interest. Then that also boosts up the price. So, also the way that we structure the relationship with the builders is a little bit unique. When we work with Kenwood doesn't charge any profit on the project. They take their profit at the end as any investor would, except they take it after the investors get their profit off the table. And that's what, besides the fact that Kenwood gives us an amazing construction quality, the fact that they're willing to do this project, do the construction at their cost. Plus we cover their overhead so they don't go out of business in the process. So there's an overhead budget, and then there's their cost, but there's no profit in there for them. And they're so confident that they can build these projects on time, on budget, and with a quality product that will sell quickly, that they're willing to take their profit at the end. So you will see that when we talk about the waterfall, where they get their profit. I think they put their money where their mouth is, and that's pretty impressive.
Well, Ben, thank you. I'm going to move on to our downside protection slide. I believe the waterfall that you were mentioning only discusses the LP waterfall. We can walk through that a little bit more, or we can stick on this slide first.
Okay, do you want me to talk about it, or do you want to do it?
Go for it.
So downside protection. The first and foremost is our relationship. So you want to think about it as investors are team A and Kenwood Builders is team B, and we come together to create this joint venture to make this happen. So we have to make sure that Kenwood, the builder, who has a lot of control over whether or not cost overruns are going to happen or whether or not the quality of the project is going to be something that gets built so it can sell well, it's a real linchpin on making sure these deals go well. So the way we control that is by telling Kenwood, you don't get your money back until our investment group achieves a basic hurdle. And in this case, the basic hurdle that we're targeting is a 12% hurdle. 12%, not 12%, so if we're investing as an investment group 1.1 million, we're not saying that we get 12% back on our money. It's an accrued 12% over 2 years. So it ends up being more like 27%. 1.2 times 1.2 is 1.44.
Yeah, 144.
Yeah, okay. So we get a 44% return on our money. That return is paid out to our group. And meanwhile, Kenwood, who's put money into the deal, they've done all the work, they haven't taken any profits off the table, says, you'll get that 44%. What's left over is what we split with Kenwood. So we split the rest of the money with Kenwood evenly. That's how they make their profits. That's how they put their money where their mouth is. Then we, as our investment group, divide up our 50% plus that 12% annualized return. I really like the deal. It does two things. As an investment group, it gives us the opportunity to attract really high quality builders like Kenwood to our projects. Getting a good quality builder is the difference between having a great project and a horrible project. So we have great builders locked in from day one, and the great builders, their incentives are totally aligned with what we're doing. And that to me you almost couldn't get better downside protection than knowing that the person who's responsible for all of your cost structure doesn't make their money until you have gotten your basic return. So even in a worst case scenario, Kenwood walks away, they've done their construction, they've had some cost overruns, right? They sold it for under what we expected to sell it for. Even in that scenario, we as the investment group get our money back plus a 12% annualized return. And there's even a scenario where Kenwood doesn't even get the money that they put into the project out of the project before you get that 12%. So they could even lose money at that point. I promise you, Kenwood would not be in this deal if they thought there was a realistic chance of them losing money on that. And if we had Boris and Jerry up on the video on this one, they're laughing because they're like, well, there is no chance they're going to lose money on this one. They are so confident in it. But that's the alignment of incentives that makes it a good deal. That's why we're excited.
And thank you for sharing. I do want to correct the record. It would be a 25% total return. That's
25%
over
12
2
times 12 is 144. But
so we are running just a little bit after 5 now. If we want to go through the waterfall, we can take a minute or two to do that, or we can start wrapping up the presentation and open it up to questions.
Let's skip over the waterfall for now. We can dig into that with the questions, I think, to show exactly how we get to those returns. But I do want to just mention, for the sake of the SEC, the risks. So let me just mention the risk slide quickly. What's that? There are certain risks here. Number one, there's a risk that the market will crash. We're going to bump into a COVID scenario. We're going to bump into, like, we've already looked at what tariffs are going to do to the project, but who knows now? Like, there's craziness in the world. We don't really have a tenant risk on this one because these are for sale. But in a scenario where we couldn't sell the units immediately, we would be able to rent out these units, get cash flow, and stop the bleeding until we're ready to sell them. If we did have that scenario. Financing risk, we do have our financing locked in, so I think we're in great shape there. The financing costs, Ashki, they're all fixed costs, right? Is there any variables?
Only if some of the soft cost doesn't get covered, but we're mitigating that with the budget that we submitted.
Okay, great. Liquidity risk. This is really a question of supply and demand. The Boston market, the Brookline market is horribly undersaturated. It has a huge need for product and it has a huge need for these sorts of flats, we think that that's not a risk, but we have to say that it is a risk. There's always a chance we wouldn't be able to sell it. Regulatory and zoning risk, there could be. We've already applied for the permits. We haven't applied for the permit quite yet. We apply once we close on the project. So between now and then, there could be a change in the zoning laws, permitting requirements. I teach courses in building code, and I am not aware of anything coming up right now, but we do have to mention it. And then there's the macroeconomic risks, and then the operational and maintenance risk. Okay, we just have to mention them too. These are all real risks. You guys are investing with your own money, and we want you to know that these risks, we are doing the best we can to mitigate them with the deal structure and everything else, but they're legitimate risks, and people can lose money in investing. So let's open it up to questions.
Ben, thank you.
Anybody?
If someone has a question, I guess you can start. Maybe raise your hand on the screen, or if you don't have access to that, just feel free to shout out a question.
Tariff question.
All right, let's take that one. And then looks like there's a raised hand after that. Ben, do you want to speak to the tariffs and the impact?
I think Boris should be the one to do it. Boris is the one who's dealing with buying construction products every day. What are you seeing in the market, Boris?
At the moment, we don't see lumber and increases. But the good thing about this particular property, this is Guthrie Hub, mostly Guthrie Hub. So we don't need to use a lot of lumber. We have some addition in the back. But even if it's going to be increased a little bit, I think we can sustain it. This shouldn't be that horrible for this project.
All right.
Okay, great. I just also want to point out that Kenwood Builders direct ships directly from a bunch of different manufacturers. So that mitigates a lot of the transactional costs that could be associated with the tariffs, where usually, I know when COVID hit us and there were a lot of price jumps happen, that every middle person added another 10% onto it. And by the time it got to the end user, it got extremely expensive. If you're direct shipping directly from the manufacturer, from the warehousing in Europe or Asia, wherever it's coming from, then there's only one potential 10% jump or something like that. I see the note about a demo permit. Is that the next question, Moshe?
It looks like it, yeah.
We don't need to demo that house because this is historic house. We work with preservation people, so they want us to preserve, and we're okay with this. It is the goal to preserve this house, and we don't need to demolish anything there.
The key here to remember is that if you wanted to demo the house in Brookline, there'd be a 1-year delay. So
Ben, that would be tear down versus.
Yeah, we cannot demolish.
Tear down versus walls.
Yeah, we cannot demolish this house. It has to be, but we perfectly can work and do guttering hub of this house, which is perfectly normal, and this is not a problem. We're gonna preserve the house. One
of the cool things about the house we didn't mention is the ceiling heights. The existing house, the first floor has 12-foot ceilings. The second floor has 10-foot ceilings, and then in the third floor, there's 8-foot ceilings. Boris, what's your strategy to create high ceilings for all of the units?
Actually, because when we talked to Historic Commission, they told us that they don't want us to do addition in the back, which overpower this front house, historic house. So we have to make it lower the addition, little like 1 foot total lower. But the way to do it, we're gonna have few steps down from the main house to the other house, and in this case we're gonna have everywhere high ceilings, and it's already been designed, which basically in the flat it's gonna be 2-3 steps, actually 2 steps, but the way I see the plans, down from one floor, from one house, one basically envelope to another.
Okay, and what's the ceiling height going to be in all of the units?
I think we will keep the same ceiling height maybe we'll split. I rather not to split, but if we have to, we'll split. It's the ceilings and make them all like about 10 feet high, basically around 10 footers.
Okay, so it's not 100% decided whether to keep everything the height that they are, the 12, 10, and 8, or to bring everything to a 10-foot ceiling height.
We will try to maximize its possibility. Like I said, we can adjust floor joist on existing house, and or we can do steps. We will design in the future development, but everything is possible. And in any case, we can do either or. We just need to calculate the cost. What is better for us money-wise? Drop the floors on existing house or put the steps, and that's it. This is the only question. In any case, a few steps on a flat not going to diminish the cost. It's beautiful, and the way architect create the steps in a hallway, which nobody even will feel.
Boris, even though Kenwood is not doing all the projects that Chestnut River Business House is working on right now, you're working on two. This will be the second project that we have you working on. This and Highland Street, and then eventually we'll be working on Westburn also. Do you have the capacity to do 3 projects simultaneously?
Absolutely. This is what we do, because mostly we have management team, and this is what we do. The rest we have subcontractors, and we have a lot of reliable subcontractors who we can really trust over the years working with. So we feel very comfortable.
Okay, great. Thanks. Sorry, Moshe, continue. I took everything, didn't I?
No, I mean, I couldn't have said it better myself, and I'm not just saying that. I guess that really...
Hey, gentlemen. I couldn't find the raise hand feature. Just a few questions, and I think I'll maybe just throw them at you, and then you could address it, maybe 3 of them. One, what do we know about hazardous material in the existing structure? What's the stage of completion of the design documents? And what is the construction contract type? Is it lump sum, fixed fee, guaranteed maximum price? Those are the 3 questions I had.
Let me let Boris talk about the state of the construction documents there.
Yeah, the design documents. What level of completion are the design documents in? That kind of informs a little bit about how solid perhaps the pricing assumptions are, because every line an architect draws always costs us more money.
Actually, as it was mentioned previously, that we worked with original architect who work on this project with another developer. So it's been a little bit easier for us. But at this point, we on the last round of our reviews of design, and the house basically ready to go to historic hearing, which already we're scheduling for next month.
So the plans are basically done at this point.
Yes.
We're just touching up a few items. The renderings you're seeing here are based on the most recent set of plans. The other question you had is the type of construction agreement we have. So the construction agreement we have with Kenwood is that Kenwood has a fixed price to do the project management, but we pay the cost of the subcontractors directly. Ashki and I review all of the invoices. Remember that I'm a general contractor also, and I actually have about 15 years working as a subcontractor for Kenwood, my company did. So I'm very familiar with the way they do work, and I can tell you as a subcontractor that they do a really good job of extracting value from their subcontractors. They get really good pricing. There's a lot of builders out there who like to have a really soft and cushy relationship with their subcontractors, and as a subcontractor, it means you can get a lot more profit into it. Kenwood expects you to show up and work for the sort of the minimally accepted profit margin and do a grade A+ job on every one of your projects. So I dealt with that from the other side, and now it made it really comfortable for me to turn to them and say, I want you guys to build my projects, because I know what sort of projects they run. So we pay their cost, we review all of their costs before paying any of the bills, and we pay them a fixed amount on this project. Their fixed amount for their project management is going to be $315,000. Let's see. There's one question in here.
But he also had a question about the hazard.
Yeah, thank you. Yeah.
Hazardous materials.
So I actually had a long conversation with the banker about this. He's treating this like a commercial site. I told him, I said, listen, you would not have this level of scrutiny if you're financing this as a primary res single family, but he's bringing the same diligence that you bring to a commercial site, and they're ordering all the historical hazards, desktop environmental on it, and if everything shows up clean, we're going to go forward. But if something shows up, then we'll continue with the environmental. But as of right now, everything's showing up clean.
In terms of feedback from the building department, Boris, did you get any pushback? I know you're in there and you've talked to everybody multiple times. Any potential issues you see from the building department to get approvals here?
The biggest hurdle is historic. Once we will go through historic, we should be more than fine with this project. Specifically, we by knowing what previous developer tried to build and what was feedback from the neighbors from historic, we trying to basically attend relate to every problem or question what neighbors ask, what historics ask, and looks like we trying to achieve what we need to do for, like everybody asked before, before it was construction of multifamily 20, what no, I don't remember how many units he was going through. Originally,
he was going through 10.
Yeah, but before 10 it was 20. It was another one. So
right.
We not doing any, and everybody was shocked with the amount of units. So we doing only 3 units right now. We using existing driveway to get under the house. So the other building we lowering. So make sure historic happy with what we do. We're trying to basically get through it relatively quickly, have easy go. So this is what it is.
To Elliot's question about what sort of incentives are the subs getting, so why would a sub go work for Kenwood if they're going to get paid sort of bottom dollar and expect A+ work? And the answer as a subcontractor is you're doing it because you trust that when Kenwood calls you, they're ready for your work, so you don't waste any time when you show up, and that they pay you immediately. So it's quick payment and it's efficient job sites, and that reduces your risk and makes them a great builder to work for. And knowing that having good builders who know what they're doing, like Boris, goes a really long way to making sure projects get done well. Second question, Elliot. Yep, we will email out this presentation right afterwards.
I can't help but make one comment on the beginning portion of the presentation where you were talking about Brookline as a viable community. I live in Brookline, have rental units in Brookline, and you left out the school system. That is, in fact, not to mention, I think a couple of years ago, we had more doctorate degrees per square mile than any other community in the country at 14.25%. I don't know if that still holds true. But this site happens to be, if I sent my kids to one of the best elementary schools, I'm walking through a playground and dropping them off at the soon-to-be new school that's being built right now. It's a phenomenal neighborhood. Brookline is, for those that aren't from the area, in the top 3 school systems in Massachusetts, and that's why it holds its value. And I would say, just to confirm, that even during the 2008-10 downturn, we didn't experience much chaos. In Lexington, where I raised my kids, and in Brookline, this is a very solid investment. I just want to say, from a location perspective.
Yes, I will definitely add that in. Thank you, Greg, for bringing that point up. We are coming up on the hour. So in the interest of time, I just want to thank everyone for joining today's presentation. It's been great seeing all of you. Boris, Greg, thank you for joining the call. Ben and Oshki, it was great hearing about this project. And if you do have to jump, please don't feel bad. We will send out the recording and presentation once those are uploaded. If you have any other questions, we will stay on for a couple more minutes. But thank you, everyone.
Thanks, Moshe. You did a great job.
Thank you, Moshe.
Thank you.
Thank you.